Today my topic is about Bitcoin option trading and arbitrage. And my name is Linus, and I'm a retail trader and the investor on the Bitcoin. And before we started, and I have to say something is cryptocurrency investment is really high risk. If you don't understand, please don't touch it. Everything said today is not financial advice. It is on the education purpose. Okay, and before we started, and you should understand some basic concept about the option. The option, the top level of the option, and you need to understand the call and put. Call option uh, is excuse me, the call option is mean you allow the buyer to have the right to at the certain price on or before the export right, regardless whatever what happened in the market. Let me give in an example. Okay. Oh no, no. Wait a second. And I was prepared to opening this Deribit right now. And the Deribit is a option trading platform. And we open this option chart. And here is different date option. And because option have the different side, in the have the more side about the with the different side with the future. The future without the date have the perpetual future, but in the option we have the different expire date, and you can see it here in the 23 days later, and this option going to be zero. It means you're not going to treat this option available, and this is the some basic concept about the option. And the call option at your side is a call option, is and the right side is a put option, and you need to understand this concept at first. And let's see what's going on. And in the middle, we have price. It means you need to choose a price you're going to betting on. I don't know any word to describe this your behavior. Now the price is so I need to ask your opinion. All right. If someone don't know what is trading view, and the trading views is you could watch the financial market price market situation, and we because we have the different price action on this, and someone trading option and without watching the price chart, but my personally I have to watch the price chart to make the trading decision. And how to make and the call option is allow you to you have the right to buy a underlying asset at the specific price, and the put option you is give you the right to sell the underlying asset at the specific price is different with the call option. But this situation is only happen when you be a option buyer. But if you selling an option, this situation will be different, such as like this. Let me give you an example. Here is 33,000, and right here, in this option will expire on 23 days later. And if you selling this option, this is the bid side, and option is a contract. We going to sell to the bid side and buy from the ask side, and you using 0.1 Bitcoin as a initial capital to sell option, and you will gain 0.008 Bitcoin. And but this price will go to be changed based on the Bitcoin price. And when the price go up, this will be against you. And if the Bitcoin price go down, this will be benefit for you. And I want to make sure I make it clear. And let's just keep moving. Okay, okay. And I know you are you guys are searching on the blockchain industry and teaching about people how to manage their code or something else like this. You guys are really really smart and to understand this. And the premium price, the premium price is the price we're going to pay for the option, or we selling for the option, just like this. And there six, 36,000 we're choosing this when this strike price is at the 36,000 bucks. And if we selling this option, we're going to collect 83 bucks. And if we buy this option, we're going to spend 153.85. But actually, this money is calculated by the Bitcoin. And you could choice like this. Let me see. Yes, right here. You could just showing the Bitcoin. Show it just using Bitcoin. But you want to visualize the actually how much price you how much premium you going to cost or collect. You could turn on this, and yes. And let's we just go move forward. And oh, don't worry about you. If you have any question, I have the Q&A section in the final, so don't worry about it. And will give you. I will try to answer your question and try my best. If I don't know how to answer that question right now, and I will figure out and give you the great answer. Everything is just based on from my personal trading experience. And in the bottom of pyramid, and we have the ITM is mean in the money, ATM at the money, and OTM out of the money. And before this presentation, I'm prepared for this. I'm trying to Google it on what is ATM. The Google give me the answer is ATM is a situation where option strike price is identity to current market price of underlying security. Maybe you hear this concept, you don't you mean what the fuck is this, right? And being this, I will give you an easy to understand what is ATM, what is ITM, what is OTM. We could understand ATM as a border of the is as a border of the OTM and out of money OTM and ITM. It is a border. We have the different country with country have the border, and the border is the you could thinking that the border is ITM, and the OTM is out of money option. Out of money option. Here is a simple way to understand what is OTM. OTM in the expiry date. Yeah, just give you an example. And this option will be expired 21 hours later. And after 21 hours later, you couldn't trading this option contract. And you see this, those contracts are going to be uh, worthless, right? And you couldn't sell it. And some have the still have the value. Uh, but most of this option is call option and this is put option. Most of their option going to be worthless, and some option on the expire date going to be worthless or going to be zero. It is called the OTM. This is called a out of money option. And some option is called have the still have the value, and such as like this is have the green side here, and it is you could still have the when the this option contract expired and still have the value. It is called it's a in the money option. Okay, and let's we just go to further. And here is the difference between the Derbit and Bybit. I'm sure a lot of guys trading future on Binance or the Bybit, and the Bybit still have the option. And my personally trading on the Derbit. On the Derbit, you could using your Bitcoin uh, to trade the option because it's proof of work and doesn't like the Ethereum. After the merge, Ethereum is becoming to the proof of stake, and you couldn't using your Bitcoin just stake somewhere to making more Bitcoin. And the reason why I choosing to trading on Derbit is because I could using my Bitcoin to make more Bitcoin. And here's a Bybit. And Bybit is allow you trading on USDC. Everything the option contract is trading based on the price is USDC. You could trading on the Bybit just using the USDC, but you couldn't trading Bybit on using your Bitcoin. And here's a different and here is a if can you repeat that again? Okay, okay. It is going to be same lost. Here is the here is a P&L chart right here, and if you going to and I will go into an example right here, and you say I understand your mean is if the market against you, right, and what's will going to happen, right? Sure. Yes. Tax. What's mean tax? Such as the role is is in China we don't pay tax to trading option, or maybe it is in China if you're selling your asset or your stock you don't pay any tax. I know in the United States you have to pay something, right? Yes, and this is uh you could using some such as like VPN to avoid the tax or something else like this. And but in China, we're treating the financial derivative. We don't pay anything. Yeah. Can you move it down? Okay, okay. And here is a really exciting part is about the arbitrage strategy. And today I'm going to sharing a strategy I often using in the bear market is called a cover call. The cover call is maximized two with two items. One is your coin. You're holding your coin and selling a call option and above the certain price. I give you an example. Something like this. Now the Bitcoin price is right here. Um, and when you go to the option chain and you're choosing that one after one day you betting on the Bitcoin price won't go to the 29 500s and you going to sell an option here. The delta maybe uh, I couldn't speak. I couldn't use. I couldn't trying to describe anything in the option such as the gamma, what is gamma, what is vega, what is theta, or what is rho. And I could give you an basic information about how I built the portfolio. And if I betting on, if I thinking, oh, the price won't go above the like second I and 500 and this is I think this the price after 20 after one day it won't be go above this line, so I'm going to sell this option and I collective 48 bucks. It means 0.003 Bitcoin. And when you're selling option, you have to using zero point 0.1 as a margin. Yeah. And let's we check about this. And this is almost 5% rally. And you thinking that oh this price won't go about this, and you could sell it. And because you sell it, you collect the premium as about is right here. And when the option going to expire and go to the because of the time and going to be the value of the this option going to be going to be less. So uh, I think you have to buy this. Buy you selling something and you have to buy it down. But here is no ask price. So this is not good trade. So we need to make another. I give you another example. Selling this, the delta is 33,000, and I still thinking that this couldn't be about that. And this is not a financial advice, and this is just for the education purpose. All right, guys. And because we on the bull trend and betting on the price won't go above this line, and I will using this. Yes, that's right. And let's we see the expire date, May 26. May what? Uh, based on the technical analysis to make a decision, but it still need to the building the long short portfolio based on the Greeks, such as the delta. I will talk about this later. Yeah, how wait, 6. That's right. And just like that. And this is the daily candle I'm going to show you. And you're watching right now is a daily candle. And when the price is nearly to the expiry date, and if the price is not go above the 33,000 bucks, and we selling this contract for the for the 0.008 Bitcoin is going to be zero. And so we make the we make this profit, but we have to bought it back on the different price, or we could bought it when the prices still go down. If the Bitcoin prices go down and the option price is also go down, and we could buy it uh, just during before it, or before it before the option going to be worthless. Yeah, just like that. And the main risk is that if the price is go above the you go above this the strike price, you're going to lose. And even if right now, if the prices go up right now, is you still going to lose. But uh, with the time decline, you maybe have some profit or like that. And all right, the one thing I want to share with you guys is before you're trading it, you have to watch the chart, watch the option price chart. Option price chart uh, is not the same as the spot chart because of the option is a contract. They have their own price, and absolutely right now selling an option is not a good choice based on the the price action. And we could sell it right here or something. mm, no, no, no. This is we couldn't. This is not a financial advice. I couldn't say it more than that. And before we make the decision to sell or buy an option, we have to watch a chart and watch the option price chart. And this is something I learned from some major mistake. Yeah. And let's we just keep moving forward. And this is PNL for the option your position. And if we this is here is a premium. We selling on a call option, short call. Yes, short call is different side with your with the long call. The long call is you thinking the price will go up, and if the prices go above your strike price, and you're going to make a lot of, and but your shorting call, if the prices go above your strike, you're going to lose a lot of. This is the same uh, concept in the future. All right, risk management. In the option, trading option, another item is really important is volatility. And we building the option position. First thing we need to think about is hedge. Different with the future. Future only could choice if the price go up, you make money. If price go down, you only have the long or short. But the option have the three side, have the different with the future. Even the market with the sideline, just not go up or not go down. I give you an example here, and just like right here, we didn't go up or we didn't go down. Just like in this range. Mm, This range, we the prices didn't go up or go down, and we could make a really great profit as a option seller because the time is moving, and we make the uh, theta and getting profit from the time decline. Yeah, and if you want to learn more about option, and I will recommend some YouTuber is the really great option educator. And here is a portfolio I was. And before we making the trading decision, and we have to we need to make a plan when to open a position, when to close a position, and uh, if you are really good at trading, and you need to build a long short portfolio, and because of building the long short portfolio is using to the hedge to protect your position. Okay, here is an example. And this is option. This is a trade I was made, and this trade is this that day is April 2nd, April 2nd, and after the go up higher, it is based on the probability, and because of this, because we're not in the bull market, and we couldn't just strictly go to the star rocket, go to the moon or something like that. And I know something, maybe we have continued to rally something like that, and I decided to buy the two quarterly option. Because of the quarterly option have the really slow time decline, it won't be really hurt me. So I buy the uh, long the one call option and long put option. Whatever the price is go up or go down in the future, uh, I still going to make profit. And upside and the upside and the downside, I short the 2 monthly call option and short the 3 monthly put option. And because the fundamental this is based on the still based on the volatility. Yeah, is you could see it right there. Yeah, this is a Bitcoin historical volatility index, just like the VIX. Uh, when I open that position, and the volatility is really low, because of the volatility is still a really important part of to affect the option price. I know some when I bought the option, and it's going to be cheap, so I bought the two quarterly option, and short 2 monthly option, and uh, I already I make a really good profit from this trade. And because of after this everybody know the time, this not time, the price is go almost about 3,000 31,000, or just like yeah, let's we go to back to the watching this price chart. Yeah, and mostly go to above this. And but how I deal with the 33,000 this two call option, and I using the future to hedge this. Yeah, and on this you have to know, you could using the option, and you could using the future, and such as you still could using ETF to hedge your position, and just like that. And yeah, this is all my presentation right now. And here's a Q&A section, and I will try my best to answer your question and what you confused about, and what you trying to know. Yeah, anybody? Option is trading option is really complicated. Yes, yes, and The reason why people are lovely trading future is the future is easy, and when you open the position and you